Good evening, everybody. Welcome to the Chartist Trading Model Mentorships, which is going to be a long time something that will be holding for throughout March month, and we are falling into it. Which I'll be creating a group where you're going to see real data and how things unfold. So, for the sake of hindsight, people can come in there and get a real good live course on signals. Not really signals, but something like beforehand a prediction of where the market is going before it happens, something like that. You will all get it in my group, but I don't really know where the group is going to be, either WhatsApp or Telegram. I don't know because none is being planned. Only what I know is I'm presenting a video. So the Chartist trading model, we're dealing with reaccumulation phase, seeking external range liquidity. What does that mean is when the market is expanding deeper or going lower, like people used to say, buying deep, selling deep, or whatever they call it, which I really don't care about that word of English. It's not my mother language. So the thing is, we have to anticipate where to seek more. Okay, we're seeking outside the scope of what retail are. Maybe we can be seeking the same thing, but hey, they can get in wrong and we can get in right. We can also get in wrong, they will get in right. So the whole concept here is expansion, seeking expansion. We don't base on the consolidation. Reaccumulation is a phase where the market chooses to come back. It could stay for a short period of time before it expands lower, i.e. let's go into the chart. Looking at this chart to the to the left, on the 5-minute Nasdaq chart, Capital.com is what I use. You can see how the market has been consolidating here after a large range down inside of what a fair value gap. Now this fair value gap might not be as a easy sell side imbalance, buy side inefficiency to predict a sell, thinking okay, you can sell from the half point of it and trade your stop loss here. No, there's no logic behind such thing. Like, okay, the market is going up and then you're going to sell, putting your stop. There's no logic. I have never seen a strategy with some rules like that. By the way, time base, if you look to the downside, you're going to see 10 a.m., which means it's almost to the closing range of New York AM session, which we are falling into PM. So basically, we anticipate the market to consolidate based on time. So when the market is doing so, the only session we can have is after lunch, which is 1 o'clock. Look at it. Can you see? Even though I'm not drawing something, but if you can look closely, you're going to see that this is 1 o'clock when this expansion all starts to came in. Now this might look really confusing looking at the chart like this, but hey, look at this. The sell side imbalance, buy side inefficiency, also known as negative fair value gap, could not be a perfect sell signal without anticipating some things. Things like what? A draw on liquidity, that is where the market is likely to go down to, and also a market structure shift. Now this might be, you see, if you look at this range, this could be a market structure shift. Perfect. But hey, this fair value gap is also below discount. So if you're going to be selling, you have to seek sell from premium, because you cannot start selling at discount when you're already in discount, seeking more discount. So you have to wait for premium. So the market rallies to where this is a perfect sell for anyone thinking of short idea here. He is absolutely perfect, but hey, he has to endure the time factor, meaning if he's going to sell here, he must be willing to expect a consolidation ahead of the 2 p.m. New York noon, which is also the launch hour for most big traders, which I believe, with my years of experience in trading, 12 p.m. on Nasdaq is kind of crazy time to trade. Yeah, you have to endure the idea that anything is possible. Some sorts of fucking retracements are likely to unfold. So selling here, hoping for a drop, nothing wrong with that. But for the retail chart pattern traders who anticipate a short on this double top neckline, hoping for more sells, they are also right, but it depends on where their stop loss is, because I have never seen a double top having a rule of a high-end stop loss. Most of them have that kind of a stop loss projection to the midpoint of whatever the range was. But looking at this closely, with this negative fair value gap, there is a very fair value gap, and also this, which is also inside of a balanced price range. Yeah, it's a balanced price range in another form too. Even though this kind of consolidate here is also a balanced price range, the market tips into that, running this liquidity. Going to your 1 minute chart, you're going to spot a short idea here, seeking more short-term internal range liquidity, sell side, another internal, then the daily external range liquidity. That's why the topic for today is reaccumulation seeking external range liquidity. So the market is reaccumulating inside of an internal range liquidity to seek this external one. The whole idea, the whole framework was just seek for this 28, that's one. But hey, I was looking for 2080. You're going to see the video shortly of how the trade plays out. And here is everything. Let's move into the chart. If you look here, when I came in, I was seeing this trap of retail traders. Apart from the ones thinking of this double top idea, I also spot this. Now I wasn't sure of the market going back to this IPGF, so I had to sell, seeking for a drop, making this a market structure shift, which was very perfect. And then external liquidity, I had to pause the video in some cases because Camtasia was kind of reloading and there was not so much of long a session to record everything to this low level. But hey, everything was perfect. This was my first entry, I guess, but kind of error. I retrieved something and I had to re-get in, so there was so much of execution in one side of my trade. So the idea came in, look at that, IPGF, right? Shorts, further shorts. You can see that the fair value gap, the sell side liquidity, this is internal, and then the external range liquidity to the 20,800. Now why am I choosing this? Because you can be perfect, and this is a short-term signal from a 5 minutes projections, so it's not a 1 hour idea that I'm going to hold forever thinking okay, if the market is going to keep selling, it will go deeper for about 1,500 pips, 2,000 pips. No, the whole concept is selling here, seeking for this. Even the 20,820 was a greedy concept for me. Yeah, because I don't know if actually we're going to get into that without using the expansion Fibonacci retracement, which lead us to this, and then a shift in market structure heading for the 250 micro. Yes, I could project a buy from here if the market will run through this short-term high and show no willingness to come back to this 20,760. I could take a buy, aiming for what? These highs right there, further highs right there, and maybe a reversal causing what? Final micro, because the market is set to close. If you look at the EMD technique of SMC boys, the idea is if the market is going up or down, it has to create a high and then a closing price after the opening, low, high, and also the closing price. So this could literally be a high of the day, which I might not be perfect. That's why I didn't trade it. I just stick here, and that's the final draw. And for people who want to see so much of these concepts, you're welcome to stay on to this channel, which I'll be posting most of them daily. Wish you good luck and also good trade.